Hey guys, welcome to another Damilola Forex Academy teaching. In today's teaching, we are going to be talking about multi-time frame analysis, how we are able to use multi-time frame analysis to our advantage in breaking down the markets and getting the highest probability trade, and how you can also be able to repeat this system for the most concrete and the most precise way of analyzing and breaking down the market. Okay, so grab your pen, grab your book, and write down every single thing I'm going to be talking about in today's teaching. Let's go, guys. So what is this multi-time frame analysis? Multi-time frame analysis entails seeing the market from the use of multiple time frames. We all know that in the markets, we have multiple time frames, okay? That is from the monthly to the weekly to the 1 hour, daily, 4 hours, even to as low as the 1 minute time frame, okay? So the multi-time frame analysis entails what? Looking at the market from these time frames, okay? Instead of just picking the 15 minutes and just sticking to trading on the 15 minutes, or instead of just picking the 30 minutes and sticking with trading on the 30 minutes, the multi-time frame analysis entails what? Using the coordination of all of these time frames, okay? Let's go ahead and write that out. That the multi-time frame analysis entails the art, because it is an art of the coordination of multiple time frames in analyzing and breaking down the markets. Okay, so when we talk about multi-time frame analysis, like we said, what are these multiple time frames that we have? Let's go ahead and, list these multiple time frames that we are talking about. Okay, so it's important to note that we have several time frames, and this includes what? The monthly time frame. This includes, or let's just write the monthly. Obviously, we know it's a time frame. This includes the weekly time frame. This includes the daily, the 4 hours, the 1 hour time frame, the 30 minutes, the 15 minutes, the 5 minutes, and the 1 minute. Okay, so these are the time frames that are available to us. Okay, so out of these time frames are categorized into different time frames. Okay, that is what we have: the big time frames and we have the small time frames. Okay, it's important to note that the big time frames are the time frames that allows us to see the overall direction of prices. Okay, so what are these big time frames? Okay, so first of all, let's start with the monthly and the weekly and the daily. Okay, so these 3 time frames are known as the big time frames. The big time frame allows us to see the overall direction of prices. Let's go ahead and write that out, that it allows us to see the overall direction of prices. Okay, so the big time frames gives us that bird's eye view, that eagle eye, seeing the whole city, seeing that large. It's like it's like standing at a penthouse floor. Okay, you can be able to see what the whole city. That's what these big time frames allows us to do. It allows us to see what the overall direction of prices. Okay, it also allows us to see the overall trend of prices. Okay, overall trend of prices. Always remember that the trend is your friend. Okay, so if you're able to see the overall trend of prices and the overall direction of prices, this means that what you can be able to ride in that wave. Okay, ride in that wave. That is what it allows us to do. Okay, we don't fight against the wave of the market. Instead, we use these big time frames to see what the overall wave of prices, and what we use the small time frames to be able to place an entry in order to ride this overall wave of prices. Okay, one might ask, why don't we use these big time frames to place an entry? This is because the big time frames will give you a very wide stop loss. Okay, and if it gives you a very wide stop loss, you are not going to have the best risk reward on the big time picking trades on the big time frames. Instead, we go to the small time frames to break the market into more minute, fractals, and we're able to enter the trade and ride with the wave that the big time frame tells us. Okay, so what are the small time frames? The small time frames are the 1 hour, the 4 hours, the 1 hour, the 30 minutes, and the 15 minutes. Okay, we also have the 5 minutes and the 1 minute time frame. However, we believe that the 5 minutes and the 1 minute time frames are not the most concrete time frames in terms of structures. Okay, so instead of me entering a trade on the 5 minutes time frame, I will wait for 3 5 minutes time frame close, which is the 15 minutes time frame, to pick my entry. Okay, so instead of just bumping into an entry after a 5 minutes close, I'll wait for the 5 minutes close to close 3 times. This means I'll go to the 15 minutes time frame to see the close of the structure on the 15 minutes time frame at the minimum. Okay, so these are the small time frames. Okay, so now what are the functions of this particular small time frames? Okay, so one, they give us the real time direction of prices. Okay, so what does this mean? This means that this means that if the overall direction of prices is bullish, for instance, we can actually go onto the 15 minutes time frame, and the 15 minutes time frame will be giving us a quick sell opportunity. We know that we are trading a retracement, okay, but we know it's very quick. It's just to grab some buck, and go away with some amount of money from that, okay, which is totally within our system. Okay, you can trade retracements. Okay, so far you know that this is a retracement, and you know that it's like a bank robbery. You are just coming to grab a little and run away. Okay, so these small time frames gives us the real-time direction of prices. They are also our entry time frames, like we talked about. They are our entry time frames. Okay, this is because these time frames gives us a reasonable stop loss. Instead of entering on the big time frames where we are going to have this very wide stop loss, we enter our trades on the small time frames because they would give us reasonable stop losses. Okay, so this is very important when it comes to the breaking down of the time frames. Obviously, the small time frames also gives us the real-time trend of prices. That is okay, quickly, is prices trending in the direction of the big time frames, or is prices giving us a quick retracement opportunity? That is a quick trend in the opposite direction for us to just grab a very quick retracement opportunity. So either or, these are the breakdown of the time frames, and we should go onto the market understanding the use of each of these time frames, and we don't misuse them. Once we understand the uses of each of these time frame, we are able to use them to the best of our ability, and the time frames will provide us with the best answer to the breakdown of the market. Within our multi-time frame analysis, we use a system known as the top-down analysis. Okay, let's go ahead and write that out. We use what they call a top-down analysis. Okay, so what is a top-down analysis? A top-down analysis means interpreting the market starting from the monthly time frame. Very important. Okay, so we are not just going on to the charts and being random with the time frames. Oh, starting from the 30 minutes to go to the 1 hour to the 50 minutes. No. We are not random. Okay, it's an organized system known as the top-down analysis. Okay, this entails reading the market from the monthly time frame, and in our own case, taking it to as low as the 15 minutes time frame. For those that love to trade the 5 minutes and the 1 minute time frame, they will take it from the monthly time frame without keeping any time frame and taking it to as low as the 1 minute time frame. But for us, because we believe that the 15 minutes time frame is the best time frame, is the lowest and the best time frame for us to trade at, we do we stop at the 15 minutes time frame. So top-down analysis entails an organized approach and an organized system of reading the market from the monthly time frame and taking it to the weekly taking it to the daily, to the 4 hours, 1 hour, 30 minutes, and 15 minutes in that organized manner, okay, down to what, to looking for an entry. Obviously, if the 30 minutes gives us an entry and we feel satisfied with the 30 minutes time frames entry, we might necessarily not need to go to the 15 minutes. Okay, if the 1 hour gives us an entry and we are satisfied with the entry the 1 hour gives us, we might necessarily not go to the 30 minutes and 15 minutes. But either or, it has to be what? An organized slope. It slopes downward in an organized approach. Okay, so now let's go on to the real life chart, and I'm going to show you all how we are able to apply this multi-time frame analysis into a real life chart for the highest probability breakdowns of the market. So now that this has been understood, what are we going to do? We are now going to go over to the daily time frame to what? To read all of the bearish structures that brought price to 61.8 and see how we can tap into an opportunity for a sporadic rise to the top. Okay, so now we are going to go over to the daily time frame to read the bearish structure that brought price to 61.8 and right to the top. Okay, so first of all, let's drop this horizontal line at the lowest point, where prices came to right here for the 61 point retracement before the sporadic takeoff. Okay, so we have been able to identify this. So what are we going to do next? Let's go to the daily time frame. Okay, so what is going on the daily time frame? On the daily time frame, let's read all the bearish structures that brought prices down and where did the break of structure happen that we are now able to tap into prices, to the top. Remember, this level right here is the 61.8. Let's just write that out, that this is, the 61.8, the exact level that prices came down to come forward, the natural 61.8 retracement. Okay, so now what are the structures that brought prices down? Okay, we have a big fractal right here where prices made this push exhaustion. This is a big fractal. Then price started with small fractals right here. They made this fractal right here. So right now, this is now what? The last lower high right here. This is the last lower high right here, and price has broken the last lower high. So within smaller fractals, prices had made all of this push, exhaustion, all of this push to the 61.8 for that pullback, and price had broken structure within what? Smaller fractals. And you could have decided to buy within smaller fractals and take profit right here. That is what? Go to like the 1 hour, 30 minutes or 15 minutes time frame to place that entry and ride to as much as this level here. Or you could have bought and just hold it, because at the end of the day, we know the overall direction of prices. We've seen what? The break of structure on the weekly time frame, and we know that what? At the end of the day, we are riding it to as much as this level. So if you love swing trading, you could have just bought, went to the small time frames, bought and just held it to as much as this level. You could have probably gotten like 1:15, 1:17, or depending on, the risk reward, you could have gotten something reasonable to as much as this level. Okay, but that aside, if you are trying to get a new opportunity with prices, what are you going to do? Right now, we saw prices break structure right here. Let's identify it again. This is the last lower high right here. Let's switch to the line charts and let's even make a pinpoint. Sometimes you can switch to the line charts just to see clarity of the structures. Okay, remember that this is what? Push exhaustion. This is a bigger fractal, then prices made a small fractal right here, then prices made this one right here. Okay, then we can see the smallest fractal that ended right here, or you could have decided to hold it through. Okay, but either or, within the eye of this big fractal, all of these are push, and this is the break of the structure. Okay, so now that we've seen the break of structure, what are we doing? How can we tap into an opportunity? Okay, since the break of structure has happened right here, what did prices do? Prices just came for a little rest right here to come and grab an higher low. Then it is from this bearish structure where price came to grab an higher low that we are now going to tap into our entry to swing it to the top sporadically. Okay, so how did prices grab an higher low? If you want to see the structures clearly again, you can switch to the line charts just for clarity. Okay, so let's read the structures. Okay, just a moment, let's take this out and read the structures. We saw prices make push exhaustion here, push exhaustion here. Then within this big fractal, this is push exhaustion here. Prices broke this small fractal here, and that sent it to come and grab an higher low right here. Okay, so if you can see this movement right here, this is it. Higher low, 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 higher low. Then this is the lowest point right here. It was a small fractal that was broken, and prices ended the opportunity. Remember that what? If you are selling, it's a retracement. So prices ended the opportunity at this level. The last higher low is still respected within this fractal and has not been disobeyed. Okay, so now that this has been found out, what are we now going to do next? Okay, what we are now going to do next is how to tap into an opportunity. Okay, we've seen what the break of the bearish, we've seen a break of what of a small fractal here, and price has completed the opportunity here, and price grabbed the higher low, and we are about to take off. So what are we going to do? Okay, what we are going to do is what, identify this higher low right here. Okay, prices came to as much as this higher low right here, and what, and this support level held prices right here. Okay, so now let's go to the 4 hours time frame to be able to see how we can tap into an opportunity with prices. We could decide to take this horizontal line off for now. Okay, so what are the structures? We can see prices make push, exhaustion, push to this level right here. This level is the higher low level that is holding prices. We saw the higher low on the daily, and right now price is ready, to take off to the top. However, how can we grab our opportunity? The last lower high has been identified here. What are we going to do? We can put this right here. Okay, last lower high identified, and look for an opportunity within this fractal right here. Okay, so now we will now take this fractal to the 1 hour time frame, to look for an opportunity. Okay, so on the 1 hour I can see it, but I can still go further to even as low as the 30 minutes or the 15 minute time frame, just to expand these fractals even better. Okay, on the 30 minutes also we can see the structures, but let's take it to as low as the 15 minutes to expand it even much more better. Okay, so that's the advantage of what the multi-time frame analysis. You can coordinate, but at least you saw that I did not skip any of the time frames we talked about. Okay, but we wanted to just come on to the lower time frames to be able to see it clearer. Okay, so now within this one, what are the fractals right here? We saw prices make all of this push, exhaustion right here. Started with this one right here. It's a smaller fractal right here before prices now, started with all of these particular fractals right here. Prices made push, exhaustion, push at that support level and broke structure. Okay, so right now a structure has been broken. Where's the structure that has been broken? This is the last lower high that has been broken. Okay, so the last lower high has been broken here, but the opportunity is what is within small fractals. Okay, so this means that what, if you want to take profit, you can decide to take your profit, within small fractals at this point. Okay, since the fractal that has been broken is just very small fractals that has been broken. This is push, exhaustion, push, break of structure, ranging market. Remember that there's no money made in a ranging market. Okay, so all of these are just ranging markets, and right now price is grabbing some bullish momentum, and it will head to as much as this level. But either or, this is an excellent opportunity for you to place an opportunity and just swing it to the top, because at the end of the day, we understand the story. Okay, that's why we are not trading within the small fractals, because we are able to connect the story. Imagine you were not connecting the story from the big time frames. This line here will be the highest you could buy to, because you are not connecting the story. But because we are connecting the story, we know that this break of structure, even though it happened on small fractal, we know that what prices only came to this support level to grab the higher low. We saw that this is a daily higher low and it's ready to take off to the top. Okay, that's why it has started by breaking structures, and it always starts by breaking small fractals. Okay, so to up into an entry for this trade, what I'm going to do, we're going to place an entry at this level right here with our stop loss at the low. Okay, below this support level right here and below this low point right here. And what we are now going to go on to the daily time frame, because this is a daily setup. That's what we call it in this type of case. We're now going to go on to the daily time frame to be able to see where we are riding to and have a projection of the risk to reward for this particular opportunity. Okay, so this opportunity, as we can see, is a 1:15 risk reward. Okay, for this opportunity, let's expand it a bit. Yes. Okay, so this opportunity is a 1:15 risk reward. Okay, if you are entering right now with where price is trading at, it is about a 1:9 risk reward. But if you're entering at the original entry after prices came, grab that higher low. Remember, this is it. Clearly, push, exhaustion, push, exhaustion, push, exhaustion, push. Okay, grab the higher low right here, and the higher low, it has started by what? By breaking small fractal, ready to take off. Grabbing the higher low right here, rejecting from this support. Rejecting from this support, it's also an higher low. It is ready to take off to the top. So if you're entering pinpoint with where market is right now, you will get a 1:9, while what if you entered at the original entry of prices. Okay, so this is where price is currently at right now. You get what? A 1:9. While if it's at the original entry of prices, you will get what? A 1:15 risk to reward. Okay, so this is how we are able to do our very beautiful breakdowns of prices, and this is how we are able to get the crazy risk reward. When it comes to prices, we are able to get the craziest risk reward, okay, because we are able to break down from the monthly time frame, go to as low as the 15-minute time frame, pick an entry, and there is no strategy on the internet that beats this one. Okay, so if you want to learn with us and understand the mastery and art of multi-time frame analysis, I have a mentorship program. I have a full course, okay, of over 100 videos, okay, in my mentorship program, with also my course in written and video formats, explaining all of these things in multiple market conditions, multiple years, and multiple examples. Okay, so link in the description below. Subscribe to the mentorship program, and see you guys on the next teaching. Thank you, guys.